Hello. Welcome to your video for PGBP adjustments. So in one page, I have put all the adjustments, all the possible adjustments that are there with regards to your PGBP chapter. And I have also put a separate video for PGBP, but I just wanted that adjustments are uploaded separately. Okay, so in these, there are basically two columns. First is your items that are not allowed or that have to be added back. That means if, for example, any expenditure that you have taken a deduction of, if that is not allowed, so that will have to be added back. Or in some cases, that item is not allowed, so you'll have to add that amount back. And next to red and green. So all your May 2023 amendments have also been incorporated in this, and it's a part of the DT in 50 pages. So your first point with regards to addition is undervaluation of closing stock. Now, if you need to understand, so if your closing stock is on the credit side, now if you undervalue your closing stock, that means you are showing less income. The moment you show less income, that means you are paying less tax. Therefore, any undervaluation of closing stock, you will have to add back that difference so that your profit figure is correct. Okay. Now your closing stock and your opening stock both have opposite effect. That therefore, if your closing stock has been undervalued and we are adding that, then your opening stock, if it is overvalued, we will have to add back. And similarly, there are these two deductions on this side, both in the opposite effect. Okay. Any advertisement in political party, any advertisement in the brochure of political party, or any payment to electoral trust by check, these will not be allowed as a PGBP deduction because these are allowed under section 80 GGB and 80 GGC. So therefore, this deduction you will get in 80 GGB and 80 GGC. Therefore, in your PGBP income, this will not be allowed. And if it is already subtracted, you will have to add back. Okay, then next is penalty for delayed filing of return. So any penalty that you pay for delayed filing of return, since this is a breach of law, it will not be allowed as a deduction and you will have to add it back. Any fees that you have paid for compounding, that is any compounding fees is also breach of law. In such a case, this will have to be added back. Next is your direct tax. So for direct tax, your interest, your penalty, all of these were already there. That is, these deductions you will not get because direct tax has to be borne by you. You cannot get a expense deduction for this. And they have also included cess in this definition for May 2023. That means even if any cess you are paying, that is also covered in the definition of tax. Next is your expenditure on issue of right share, whatever expense you have borne for issuing of right shares. Since this is capital in nature, your right shares are capital in nature, therefore this deduction you will not get in your PGBP income. Next is any IPO, that is your initial public offer or your further public offer of shares of share expenses. This is also capital in nature, so you will not get any deduction. Any expense for increasing authorized capital. Now see, all of these are with regards to your capital. All of these expenses are with regards to your capital, shares, etc. Therefore, these are capital in nature, so this will have to be added back. Next is your expenses on abandoned project. Any expenses that you did on an abandoned project, that means the project you were you were spending some money, but you had to abandon it for some reason. Since this is also capital in nature, you will not get any deduction. Okay. Now next is a franchisee fees paid. For example, you have taken a franchisee of McDonald's and you are paying them a franchisee fees. Now this franchisee fee that you are paying, you will not get as a deduction in PGBP. Why? Why will you not get as a deduction in PGBP? Because if you remember while doing a PGBP chapter, we studied that boss, your franchisees will form part of your asset. Any franchisee fee that you paid, it will form part of your intangible asset block, which will be depreciated at 25%. So if you have taken the entire franchisee fee as deduction, you will have to add that back and you will have to add it to your class of assets, charging 25% of depreciation. Okay, next is your tax paid by employer on non-monetary benefits. If your employer has given you any non-monetary benefit, any perquisites he has given, and such tax has also been paid by the employer, because on perquisites also you are supposed to pay tax. So if that tax has also been paid by the employer himself, this tax paid by the employer will not be allowed as deduction to him because it is a tax at the end of the day. Next is loss due to destruction of plant and machinery. Any loss due to destruction of plant and machinery, even though it is your loss, it will not be charged to your PGBP income. It will be subtracted from your plant and machinery block. Remember, you will have to subtract this from the block. Next is any amount paid to employee welfare trust. If any if any amount has been paid to any employee welfare trust, that will not be allowed as a deduction. Next is industrial power tariff concession received from government. If you have received any concession from the government, this will have to be added. Then next is your provision of any kind, unless it is being given in the green box. Green box is the one in the on this side. So usually all provisions will not be allowed. However, there are certain provisions which we will allow. So over here we will be doing this when we study items allowed or items that are allowed to be subtracted. Okay, now next is your interest payment to cooperative bank post ROI is ROI is the when you file your return of income, so due date. So interest payment to cooperative bank, if you have paid any interest payment to the cooperative bank after the return due date, if it is after the return due date, it will not be allowed. Any interest under section 234B for short payment of advance tax, this will be covered in our advance tax chapter. So if you have to pay any interest because you paid short advance tax, the limit that they have been given, if you paid any amount less than that and you have been charged interest, in such a case, this interest will not be allowed as deduction. Interest on loan taken for payment of income tax, that is, if for payment of income tax you are taking a loan and on this loan you are paying someone interest. Now this interest you will not get as deduction. Okay. Discount given to creditors or any amount that has been waived off. So any discount given to creditors you will not be allowed to subtract. Next is excess amount of purchase over market value. That is, for example, you have purchased something for, say example, 1000 rupees, but the market value of that is only 20 rupees. That means you have paid higher than what the market value is. So any excess amount of purchase over market value, that means it might be possible that boss, to reduce your income tax, you are showing in book that I have paid a higher amount. So in such a case, only on the excess amount you will have to add that back. Then next is your payment in cash exceeding 10,000 per person per day. This is a very common adjustment. If you pay any person in cash exceeding 10,000, remember the word is exceeding 10,000 per person per day. In such a case, that item will be added back to your income. That is, that deduction will not be allowed. Payment in cash exceeding 35,000 per transporter per day. So you have to remember that for all other people it is 10,000, but for transport people it is 35,000. The next is a sales tax not refunded to customer out of refund. So if you have received any sales tax refund from the department and you have not refunded this back to the customer, so in such a case, this item will be added back to your income. Contribution to employee pension scheme which is greater than 10% of your basic plus DA. That is, if the employer is contributing to the employee pension scheme which is more than 10% of his employee's basic salary plus dearness allowance, this item will be added back. It will not be allowed as a deduction. Very important point to remember, CSR expenses are not allowed as deduction, even though it is mandatory by law. CSR expenses not allowed by deduction. You will have to add back if it is already been subtracted from your PGBP income. Next is development charges paid for capital asset. Any expense on your capital asset will not be given on the will not come in your PGBP. It will be added to the block. Expense on transfer of carbon credit, this will also not be allowed as a deduction. Expenses not related to business. Of course, if your expenses not been related to business, how will income tax allow you to subtract it? So that we will have to add back to your income. Next is 30% of fees paid to non-executive director or independent director. NED stands for non-executive director or your ID without TDS deduction. If you have paid fees to your non-executive director, now non-executive director is not an employee of the company, so therefore TDS has to be deducted. So NED or ID without TDS deduction, so 30% of the amount that you have paid to them, that will be added back to your income. Got it? So 30% of the amount that you are paying to them, suppose you paid them 100 rupees, out of this 100 rupees, so you have already subtracted 100 rupees in your PNL, but you will have to add back 30 rupees because you forgot to deduct TDS. Next is 4/5 of VRS compensation, that is your voluntary retirement scheme compensation paid to employees, because this deduction is allowed 1/5 every year for 5 years. So therefore you will have to add, if you have subtracted the entire amount, you will have to add back 4/5 so that the net effect is given as 1/5 deduction. Amount spent out of NABARD account if it is not permissible. Remember we studied a section in PGBP where you have to deposit in NABARD account and you get a deduction. So if you have spent any amount out of that NABARD account which is not permissible, so this will be added back to your income. Any mark to market loss which is not as per ICDS will also have to be added to your income. Compensation paid to doctors. Not compensation, commission. Any commission paid to doctors. So if any pharmacies or any big corporation, these pay commission to doctors to recommend their medicines. Now this commission is not allowed as per the association in which doctors are involved. Therefore, this is actually a illegal expenditure. Therefore, this is not allowed as deduction. Any illegal expenditure in or outside India. This is a clarification that they came up with for May 2023 attempt. That means any illegal expenditure, whether it is inside India or outside India, does not matter. It will not be allowed. Any additional depreciation, if you have opted for 115 BAA, BAB or BAC, this is your new tax regime rates. So if you have adopted for those, your additional depreciation will not be allowed. Any retrenchment compensation on closure of business, that means you are closing the business and you are paying employees retrenchment compensation, that boss, since I have to fire you, I'll have to pay you some money. So that expense is also not allowed as deduction. Any STT or CTT paid if security is a capital asset, that means if your security, if it is a capital asset, that means if its gains are taxed under capital gains, then in such a case your STT and your CTT will not be allowed as deduction. Okay, sir, when will it be allowed as deduction? It will be allowed as deduction if the security is a stock in trade. So I have tried to keep it right and left so that it is, remember, that is if that security you treat it as your stock in trade, that is if it is your business asset, then in such a case STT and CTT will be allowed. So your STT is for securities and CTT is for commodities. Then next is any excess payment made to relatives. So if your relative, for example, you have put your wife in the business, or if you put your children in the business, now your child, if he would go in the market with the same skill set, he would maybe earn about 30,000 per month. But you are paying him 1 lakh rupees per month. That means you are paying him 70,000 rupees extra. So there you will have to pay, you will have to add back this 70,000 to your PGBP income. This deduction income tax will not give you, because they are saying ki boss, you are paying them extra just so that you can reduce your expenses. Okay, and then your most important point is with regards to TDS. So your TDS is section 40A IA. So your cases, if your TDS has been deducted, that means if tax has been deducted, that means the person deducted the tax but not paid till your return due date. If the tax has been deducted but they have not paid to the government, then 30% will be disallowed if the payment was made to a resident, and 100% of your payment will be disallowed if the payment was made to a non-resident. Therefore, you will always have to remember to deduct tax. And if not deducted nor paid till your return due date, that means you forgot to deduct as well as, and you did not pay either, then in such a case there are two ways. If your recipient is a, so this is not your tax language, this good boy bad boy I have put in the notes so that you remember. Recipient is the person who received the payment. So if your recipient is a good boy, if he's a good person, now who is a good boy? Who has furnished return under section 139(1) and has included above income in return of income and has paid tax due on such income. That means first he should have filed his return, he should have included this income in his return, and third is he should have paid tax on such income. Only if all three of these conditions are satisfied, in such a case nothing will be disallowed. That means all the expense that you have shown in your P&L will be allowed, provided the recipient has done these three things. But if the recipient is bad boy, recipient is bad boy means he's not a good boy. He's not done either one of these three, or he's not done any of these. Then of course it will be the same 30% and 100% deduction. 30% in case of resident if the payment is made to a resident, and 100% deduction if the payment is made to a non-resident. So this will not be allowed and it will have to be added back. Clear? Okay, now with regards to taxes, a lot of people get confused, so I made a small table. So with regards to direct tax and with regards to indirect tax, so there we have three items. First is your taxes, second is your interest, and third is your penalty. So you have to remember, for the purpose of direct tax, you will not get in either of these three, you will never get a deduction. You will neither get taxes amount, you will neither get interest amount, nor will you get the penalty amount. But for indirect tax, you will get your tax, any taxes that you pay whose credit you do not receive, any taxes and interest, provided it is as per section 43B. Now what is section 43B? 43B means says you will get a deduction only and only when you actually pay, not just book entries will not be fine, you will have to actually pay this amount. So only when your indirect taxes and your indirect tax interest you have actually paid will you get the deduction, and penalty deduction you will not get anywhere. So for anyone confused, I hope this table makes it clear. Okay, so now let's go ahead with the items that are allowed. All the items that are allowed or can be subtracted. So we did this overvaluation of closing stock and undervaluation of opening stocks. That means if you have overvalued your closing stock, if you have overvalued your closing stock, that means your income you have shown higher. That means you will have to reduce this income. So therefore, any overvaluation of closing stock has to be subtracted. Any undervaluation of overvaluation of closing stock has to be subtracted, and undervaluation of opening stock will have to be subtracted. Next is your ad in brochure of political party by company. Now what is the difference? Ad in brochure of political party, if it is made by company only, then it will be allowed in your PGBP deduction, because 80 GGB nor 80 GGC, they do not give a deduction to company for any advertisement made in brochure of political party. Therefore, this will be allowed. Next is any franchisee fees paid. If you remember, franchisee fees paid we have studied over here, correct? So any franchisee fees paid, this will have to be subtracted at only depreciation portion, that is 25%. Next is your scrap income on sale of plant and machinery which was destroyed. You remember, plant and machinery over here we had done loss due to destruction of plant and machinery to be subtracted from plant and machinery block. So this loss you will subtract, but this loss you will subtract from plant and machinery block, you will not get from PGBP deduction. But the income that you gain, the scrap income on sale of plant and machinery, that you will have to be added back to your PGBP income. Then next is your 1/5 of voluntary retirement scheme. I told you 1/5 is allowed, 4/5 is not allowed. Therefore, we subtracted 4/5 of. Therefore, we subtracted, or we added back to the income in the red box. Any 1/5 of amalgamation or demerger expenses. So that means your VRS, your amalgamation, and your demerger expenses, they are given a deduction of only 1/5 each year for 5 years. Next is premium on health insurance of employees. It should not be made in cash, otherwise it is okay. So you will get a deduction if you have paid health insurance of employees, but it should not be in cash. Any payment in cash exceeding 10K to fisherman or farmer is allowed. So you have to remember that, boss, even though we studied payment to any person greater than 10K is not allowed, it is allowed if the person is a fisherman or a farmer. Next is any mark to market loss, which is as per ICDS, income tax will give you a deduction. Income tax refund and interest. So if you have added any refund that you have received from the government, if the income tax authorities gave you a refund and you have shown that as your income, this you will have to subtract, because this is not your income. Income tax is neither an expense nor an income. Therefore, if you have already added, you will have to subtract this. Great. And any interest, this interest you will have to add back. Why? Because this is taxable under income from other sources. It's taxable under EFOS. Next is your expense on issue of bonus share or buyback. These are considered as revenue expense. Therefore, any expense on issue of bonus share or buyback, this deduction will be allowed. Otherwise, you remember we had studied so many capital nature transactions, these were not allowed. But if any expense on issue of bonus share or buyback, that will be allowed. Interest on loan taken for capital asset after it is put to use. Any interest on loan taken for capital asset after the asset has been put to use, because up till the date the asset is put to use, we capitalize that interest, we charge it to the block of assets and we charge depreciation. But if you're still paying any interest on the loan for the asset, for an asset which is already put to use, now that expense you will get as a deduction in PGBP. Therefore, you will be allowed to subtract it. Loss by theft, if it is incidental to business, you can subtract the loss amount. Employer contribution to EPF, if it is paid before, remember, if it is paid only if it is paid before ROI due date, that is your return due date, only then employer's contribution will be allowed. Okay. Now next is your employee contribution to EPF paid before PF Act due date. If your employee contribution has been paid, only then will it be allowed to be subtracted. Now this has to be paid before the PF Act due date. Remember, above it was ROI due date, over here it is PF due date. Then next is your redemption price minus issue price divided by tenure of ZCB. Now your zero coupon bond, for example, if it is issued for a 10-year period, now the interest deduction that you will get, because in ZCB there is no concept of interest. What happens in ZCB, you borrow, for example, you issue the ZCB at 80 rupees and you tell them that, boss, after 5 years I will pay you 100 rupees. I will not pay you any amount during the year. Now, immediately at the end of 5th year, I will pay them 100 rupees. That means I have paid 20 rupees as interest over the period of 5 years. So what does the income tax say? Ki, boss, this 20 rupees is not your expense for the 5th year. It is an expense for your period of year from year 1 to year 5. Therefore, what do they say? That, boss, this 20 rupees that you have paid at the end of 5th year, even though you are paying at the end of 5th year, this deduction you will get throughout the 5 years. Therefore, your redemption price, in our case our redemption price is 100 minus your issue price. Your issue price is how much? 80. That is 20 divided by 10 year of bond, that is 5 years. That means you will get a deduction of 4 rupees each year. Then next is your legal fees incurred for defending title of factory. For example, you have a factory and some other person claims that, boss, this is my factory. He claims title, he claims ownership for that factory, and then we are fighting a legal case for this. This legal fee that I will pay, that will be allowed as a deduction. Now we are coming to section 43B. Some expenses will be allowed only and only if they are actually paid. These are your 43B expenses. These will be allowed only if they have actually been paid. Okay. Now your first is any bonus or commission paid to employees. This has to be actually paid. All of these transactions have been actually paid. These are not just mere book entries. Actual payment should have taken place. Employer contribution to SPF, RPF, AGF, AS, etc. These are your superannuity fund, etc., etc. Then next is your interest on loan taken from your public financial institution, your state finance corporation, any NBFC. Leave encashment, this also will be deduction only when paid. Any indirect taxes, duties and cess, 43B will not be applicable if payment has been made up to ROI due date. Got it? Then payment of loan which has been converted from arrears of interest. What does this mean? Payment of loan which has been converted from arrears of interest. You had taken a loan originally. Now the interest payments you were not be able to pay. So what did you do? You converted all those interest amounts, all these interest, you consolidated and you made this into another loan, because consider this interest payment as a loan and I will pay this back to you. Now payment of loan. Now when you pay back this loan, even though payment of loan, you do not get a deduction, because now that is your principal amount that you are paying. However, since this loan is actually a combination of interest over a period of years, this interest deduction you would actually have received as a deduction. Just because these are a loan now does not mean that you will not get a deduction. Therefore, payment of loan which has been converted from arrears of interest, you will get a deduction on the principal amount as well, because this loan is nothing but a combination of different interest. Any gratuity paid. Okay, so actual gratuity paid only will be allowed as deduction. Provision, remember over here, what did I say? Provisions of any kind are not allowed unless they are given in the green box. So now we are studying what? Provision. So provision for payment to workers' estimation on wage and reasonable certainty. These provisions will be allowed as deduction. Provisions for bad debts will be allowed as deduction. Now, how do we calculate how much deduction is allowed to whom? So for Indian bank, if it is an Indian bank, they will be allowed as bad debt, but some limit. That means what limit? That is 8.5% of GTI plus 10% of average advances by rural bank. That is how much ever advances rural banks have given, we will give 10% of average advances also as a limit. So 8.5% of GTI plus 10% of average advances by rural bank. Your foreign bank will get a provision for bad debt as only equal to 5% of GTI. Got it? So Indian banks get 8.5% plus 10%, whereas your foreign banks get only 5% of GTI, which they can subtract from their income. Any commission paid to recovery agent for debt realization, that means these are called vasuli bhai. So if you are paying any commission to recovery agents, suppose you extended a loan to someone and now that person is not paying. So you hire a recovery agent ki boss, I have loaned him some money. Please, you make sure that you get that money back. Now this recovery agent, fees that I'm paying to this recovery agent will be allowed as deduction. Next, if your expense disallowed in any previous year due to non-deduction of TDS now deducted. That means if in any previous year I forgot to deduct TDS, so I was disallowed 30% of my deduction or 100% of my deduction, whichever case as we studied. So in such a case, if in the next year I either deduct or deposit whichever part I was lacking on, if I do that, then expense disallowed in any previous year due to non-deduction of TDS now deducted will be allowed. That means in the current year, since I have now deducted and paid to the government, I will be allowed the deduction. Not of the TDS amount, okay? Remember, only the amount that I was previously being denied for deduction. Then next is your payment towards feasibility study conducted for technical advancement related to business. Any feasibility study that you're doing, that means before starting the business, if you are investing some amount in the research of the business, this feasibility study will also be allowed as deduction. Any discount on issue of debentures, it will be allowed over the tenure. If you are issuing any debentures on discount, so over the tenure of the debenture, you will get a deduction similar to a ZCB. Next is any GST interest on delayed filing of return. This you will get as a deduction. Okay. If you have, remember, on direct tax, you will not get any deduction, but GST interest on delayed filing of return, you will be allowed as deduction. Any profit on sale of land, since this is capital in nature, if you have already added this to your PGBP, we will allow you to subtract this there because this is a capital in nature. This will not come under PGBP income. So only if you have already added this will be allow you to subtract. Grant received from government for asset acquisition. So if you have received any grant from the government for any asset acquisition minus your cost of acquisition. Then sponsorship fees, if incurred for business promotion, we will allow you to subtract it. Expenses for bringing water to where factory is located. If your factory needs some water and you are getting water from another city or from for any case, so any expenses for bringing water to where the factory is located will also be allowed as a deduction. Payment up to 50,000 in cash to employee on retirement is allowed. Okay, so remember it is up to 50,000 only on retirement, and that too in cash, because we had studied that was payment greater than 10,000 per person per day is not allowed, but this is an exception. Any salary in cash to person who is not at normal place of business for a period greater than 15 days. In such a case, if my salary payment is being made in cash, it will be allowed, and there are more certain conditions that the person's bank branch is not in the place where he is situated. So in such a case, even though it is paid in cash, it will be allowed. Next is contribution to National Fund for Rural Development. Any contribution to you make that to the National Fund for any rural development will be allowed. Retrenchment compensation on closure of some units. Retrenchment compensation, if the units are being shut down, then it is allowed. But if the whole business is shut down over here, as we had studied, if the whole business is shut down, it is not allowed. But if some units are shut down, then your deduction will be allowed. Next is your bad debts. If it was written off and it was income of some previous year, that means you have shown that as income in some year and now you are writing off. Only and only then will it be considered as a deduction and we will allow you as deduction. Got it? Then there is transfer to special reserve by bank or finance corporation. So if your bank or finance corporations will be allowed a deduction of a limit that we have given, if and only if they transfer to a special reserve. So now what is the limit? Your first is your actual transfer amount. Second is 20% of their PGBP income, and third is 200% of your share capital plus reserves minus your opening balance of special reserve. That means since you may have already transferred some amount to the special reserve. So therefore, the opening balance, that is during the year start, what was your opening balance? This is that figure. So 200% of your share capital plus reserves minus your opening balance of special reserve, that deduction, whichever of these three is lower, will you get as deduction. And with this, we are done with all our adjustments for PGBP chapter. Most of them, I say 90% will be covered in this. If you do come up with any new adjustments, do let me know in the comment section.